Hi everyone, welcome to Logical Investing with Subhendu. Today we are going to talk about a topic which nobody wants to talk about. We are all worried about it, but all we think is that we cannot do anything about it. The topic is waste or waste management. As more and more spending power increases of Indians all over, as more and more urbanization happens, as people move to cities, right? More and more people start consuming more and more stuff, and we create much more than expected waste. You might be surprised to know that 62 million metric tons of solid waste is generated in the country today, every year. Out of that, 43 million ends up getting collected, and remaining doesn't even get collected. So from this 43 million, only 12 million gets treated. Rest all of that ends up being in landfills. This industry is going to grow massively big from 62 million metric tons in India today. By 2030, the number is going to grow to 165 million metric tons. The overall waste management market is going to grow at 7% year on year and is going to touch $15 billion just in India. When we are talking about a market so big, we wanted to look at companies which are listed in this space. There is a very interesting company which we are going to talk about today, which is called as Antony Waste Management. We will talk about the fundamentals, we'll talk about the technicals of the company, we'll talk about does it make sense to have this stock in our radar. Antony Waste today trades at around 800 crores market capitalization. Translating that to dollar terms, it would be about $100 million, approximately $100 million. The annual revenue of the trailing 12 months is standing somewhere around 600 crores, so which would be again nearing 80-90 million dollars. Why I'm saying that is because when the overall market, the waste management market, is going to grow to $15 billion in India alone, and Antony Waste as a company is making or generating a revenue of about $100 million, approximately $100 million, there is definitely a room to grow. Alright, let's take a look at Antony Waste website. The website talks about the details of the company. The company is part of Antony Group, which has diversified business interest, including automotive, bodybuilding and ancillary industries. The company is one of the top 5 players in Indian municipal solid waste, MSW. This is a key term to keep in mind, municipal solid waste, providing a full spectrum of services which include solid waste creation, transportation, processing and disposal. Now it is engaged in the business of mechanical and power sweeping of roads, collection and transportation of waste, waste to energy project, and undertake the designing, construction, operation, maintenance of the integrated waste management facility in Kanjur Marg, Mumbai. It is one of the top 5 players in Indian municipal waste management industry with a track record of 20 years. If we go into the services, we would see that there are 4 key services which are being offered: waste collection and transportation, mechanized and non-mechanized sweeping, waste processing and treatment, waste to energy. Now understand this for a moment. The first thing which any company, which Antony Waste would need to do, is to collect the waste. Once the waste is collected from different clusters, then it needs to be transported into a processing unit. Some of it can be treated, some of it cannot be treated, some of it can be segregated, some of it cannot be segregated. In fact, the company in one of its recent conference calls was also mentioning that segregation of waste is the most difficult thing which they are finding. So waste collection and transportation, this is one key service which they offer. The second is mechanized and non-mechanized sweeping of roads. This is really important. So Antony Waste has tied up with the municipalities of different states and is providing this service as well. Waste processing and treatment, this is something we talked about. Waste to energy, now this is a very key area. Now if this area picks up, this will enable waste to yield value or waste to yield energy, which can then be used for multiple other stuff. So the company has 18 ongoing projects, out of which 12 are municipal solid waste collection and transportation. Those are the first category. 2 are MSW processing or the solid waste processing projects, and 4 are mechanized sweeping projects. It has geographical presence in 9 states in India through ongoing and completed projects, Right now, 5 ongoing projects in Mumbai metropolitan region and 6 in NCR, right? And overall, the collection and transportation projects account for 58% of its revenues. Processing of the waste comprises of about 29% of their revenue and others 13%. Top 5 clients of the company contributes to 77.5% of revenues. The company has a bioreactor landfill with a capacity of 6,500 tons per day, sanitary landfill of 250 tons per day, and material recovery and composting facility of 1,000 tons per day. The site handles 60% of total waste generated in Mumbai. So these are some of the information from Screener and from Wikipedia and from diverse sources, which I put together so that all of this information is in one place so that you can understand the business in greater detail without having to really dabble your hands at multiple places. So the company entered into waste to energy area with an approval construction of its first WTE plant at Pimpri, Maharashtra, with a capacity of 14 megawatt of power. Now, 14 megawatt of power, I'm not going into the detail of whether 14 megawatt of power is, high or low. The fact is that conversion of waste to energy, it's a unique concept, it's a novel concept, it is just getting started. We are barely scratching the surface. If it works out, is going to yield a lot of business revenue to companies like Antony Waste. The total cost of the project will be 250 crores, which will be primarily funded by debt, about 170 crores of debt. The waste handling capacity of the site will be 1,000 tons per day, and there are 5 only other such WTE projects till December 2020 in India. Now, the company also has its own fleet of vehicles, about 1150 vehicles, out of which 950 are fitted with GPS tracking. This all shows that the company is trying to optimize its overall supply chain. Alright, now let's look at the fundamentals of the company. The overall market cap is about 800 crores and the reserves of the company stands at almost 400 crores, 368 crores, which is fairly good for the kind of market cap the company has. If we look at the sales, monthly sales from December 2019 has been almost at 114, 118, has been hovering around that number till December 2020 when it touched 123 crores. And March 2021, 134, 145, 154. December 21 quarter has been 161. So the key thing to note here is that the overall sales has been consistently improving. Current price of the stock trades at 282 with a book value of 135. The current price of the company is 2 times the book value as of now. The company has a very good ROCE of 21.3% and ROE of 15.8%. Now, just wanted to take a quick moment to talk about the ROCE and ROE here. ROCE is the return on capital employed. Return on capital employed is the EBIT per capital employed. Now, what that basically means is whatever the company is earning before its interest and tax, that upon the capital employed is called as the return which the business is generating. Say suppose 100 rupees is what the company has put in as capital employed is 100. If the earnings before interest and tax becomes 20, then 20 upon 100 will be 20%. So that 20% becomes the ROCE of the company. The higher the ROCE, the better for the company. The promoter holding stands at 46.2%, which is a fairly decent number. If we look at the stock PE, the stock currently is trading at about 13.4, where the industry PE is trading at 24.7. So even looking at the industry PE, we still see that the stock has good amount of room to grow. Now, if we start looking at the PEG ratio, we see it at 0.64, which is way less than 1. So this is a good number. Altman Z-score stands at 3.33. If we start looking at the current ratio and the quick ratio, both are above 1. So we are good here. If we start looking at the debt to equity ratio, we have 0.37 as the debt to equity ratio. However, there was one point which we also talked about, that the company is planning to raise debt because some of the capex is going to be funded from debt. If we start looking at the chart patterns, we see that the stock was listed on the 1st of January 2021 at around 407. It made an all-time low of around 252, then again made a high of 411, then came down, and it's currently trading at around 282. The sales has grown from 114 crores in December 2019 to 161 crores in December 2021. The operating profit has also increased from 27 crores in December 2019 to 32 crores in December 2021. The operating profit margin has slightly reduced because the operating profit margin was hovering around 24%, 27, 25, and the operating profit margin today in the December 21 quarter is at 20%. Now, if we look at the net profit was at 7 crores in December 2019. That has grown to 13 crores in December 2021. The earnings per share is at right now, the quarterly earnings per share is at 4.61. Now, if we look at the annual numbers, we see that in March 2016, the sales was at 220 crores. In March 2021, the sales was at 465 crores, which was almost more than double what it was 5 years back. The interesting part to see is the trailing 12 months data says 594 crores in the sales so far, and in the operating profit has increased from 67 crores in 2016 March to 137 crores in the trailing 12 months. The operating profit margin has not done so well. The operating profit margin has gone down from 30, 28, 25, 27, has been hovering around 28, 25, and then this trailing 12 months it is at 23. I would say that it's a growing company, it is investing in its business, and we can start looking at other parameters, but then operating profit margin, as per me, should definitely improve. Now, the net profit of the company has increased from 17 crores to 60 crores in the trailing 12 months. So the company is almost going to post its all-time ever high sales and all-time ever high net profits. This is a very healthy sign. If you look at the overall reserves of the company, the reserves of the company was negative 41. That is growing to 368 crores in September 2021. The borrowings, if you see, from 161 crores, it has peaked up to 209, then it is coming down from 149 in March 21. In September 21 it is 140, which is a good sign. Now, if we start looking at the cash flows from operating activities have been positive in the last 6 years. As we see that the overall net cash flow is also positive, and the company is generating net positive cash, which is good sign again. The debtor days has been at in March 2020 it was at 70. March 2021 it has been at 70 as well. The working capital days has actually come down from 83 days to 42 days, which is a very, very good sign. The promoter holding has stayed at 46.23 since December 2020 to December 2021. FIIs have reduced their stake in the last 2 quarters. Now, going to the quarterly update of the company, it's a good quarter. We are talking about the third quarter, December 2021. And it's a good quarter in terms of revenue exceeding previous quarter due to high growth in the tonnage from both commercial and residential areas. During this quarter, the company reported an operating revenue of 148 crores, up 26% up year on year. The operating revenues increased by 36% to 422 crores for the 9 month period ending in December 21 compared to 309 crores in the same period last year. Antony Waste has processed approximately 10 million metric tons of waste in their municipal solid waste processing projects. Now, the point to note here is that we talked about the overall waste in India. We talked about 61 million metric tons being the overall waste generated in India, out of which 43 million is collected. And from that 43 million, we are seeing that Antony Waste has processed approximately 10.61 million metric tons, which is almost 25% of the total waste collected in the country. Antony Waste is able to collect. We have looked at the company's fundamentals, we have looked at the company's business, we have looked at the industry outlook. The industry continues to grow, the company continues to stay healthy, and they are investing in their growth. They continue to work with more and more municipal bodies across different states. As we continue to be able to consume more, the amount of waste we will generate will continue to increase, and that is where companies like Antony Waste would absolutely be able to make an impact, not just in terms of their balance sheet, not just in terms of their revenue, but in terms of an impact to the society at large as well. I believe this can be an interesting stock to keep in your radar, but please do not treat this as a stock recommendation at all, because we should understand why a particular stock looks interesting. We should understand if the business is really good, if the business is able to generate revenue, if the business is able to convert revenue to its bottom line profits, and if it is able to do that when the industry itself is growing and the business is able to scale further. I have taken a position in this stock, but this is no way a stock recommendation. I am not a SEBI registered investment advisor, so please do take your own buy and sell decisions after you do your due diligence and after you have spoken to your investment advisor. In this channel, you should only focus on finding out the ways in which we should be looking at companies. If after you have done your due diligence, you feel that this can be a good stock to be held on for a very long period of time, then you can definitely go ahead. That's all for today, folks. Thank you so much for tuning in. Happy investing, happy logical investing.